Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Everybody, I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone, give us a call. We always talk mortgages. We always talk real estate. We talk opportunity. We talk about the problems that you might have getting a loan, especially if you have some documentation issues, meaning that you don't necessarily get paid W-2 each and every week by one particular employer. That happens to a lot of people. Those routes that we go with those type of people are called non-QM loans. The explosion of non-QM loans, I guess, is going to be some of the topics on the show today. And how we define what is a non-QM loan is a non-traditional loan, a loan by which you're going to get if you have a business, you're making money with your business, you're running a lot of money through your bank accounts with your business, but with the business, you have a lot of write-offs. So those write-offs are to defer any tax that you might have on your business that you pay yourself, if especially it's a sub-S or some kind of a sole proprietorship or a company that you own 100% of. If you have a particular company like that that's running a lot of money through it, you can use a business bank statement loan. Now, that's a non-QM. Now, non-QM means qualified mortgage. Through Dodd-Frank, 2007, 2008, 2009, when that horrible mortgage meltdown happened, Dodd-Frank was a law that was passed that required a certain amount of things on each and every loan that Fannie Mae, Freddie Mac, Ginnie Mae would buy. Fannie Mae and Freddie Mac buy conventional and VA loans. Ginnie Mae buys FHA loans. And so in order to be a qualified mortgage, there are certain criteria, certain loan-to-value, certain debt-to-income, certain criteria in the ability to repay. All of these terms and conditions on loans got real strict back then, as everybody knows. And so it was tight, really tight, until about, let's say, 2013 and 14, when non-QM, non-qualified, which means those loans other than the ones I just described. So the business bank statement loans came along a couple of years ago, and they have been very successful for people who own their own business. So if you're out there and you're looking for a loan right now in that particular marketplace, you're in luck, because a lot of lenders are doing non-QM now. They found investors that would buy these loans other than government-sponsored entities, the GSEs, Fannie, Freddie, and Ginnie. And so the explosion in the offering of those type of loans happened. Now, right now, we have what I would consider, and I was thinking about this term, a confluence of events that are happening right now in the mortgage industry, which has made loans to you, the consumer, much more available now, and you may not be aware of it. So let's make you aware of it. What are the confluence? What does that mean? It means the convergence and the influence. Those two words together, that's what I consider to be confluence, meaning that what we have is a marketplace where the mortgage interest rates have dropped dramatically. Now, there are a number of reasons why the mortgage interest rates in general have dropped dramatically. But what are we talking about when we're talking about dramatic? Okay, let me read that. Hear that paper? There it is right there. 30-year fixed rate loans right now at 4% to 4.25%. Now, they haven't been that low in over a year. I believe you can get from Quicken Loans and from United Wholesale. If you have a broker out there and you're working with a broker, and I suggest working with a broker rather than direct to a bank or to a mortgage banker. The reason, I say that is because a mortgage broker will be able to shop for you the best loan out there in the marketplace. And because the rates between a conventional loan and a non-QM loan are within a quarter to a half point right now, it's really quite amazing that there is that much in terms of availability in the marketplace, but also that the rates are really not that big a spread. You would think non-QM would be, like hard money. Well, it has nothing to do with hard money. It just means that in that space that there is between this QM or GSE purchased loans and non-QM, which are not government-sponsored entity purchases, but something like sovereign fund or a hedge fund or a insurance fund, or they're all called Wall Street hedge funds. There are all kinds of investors out there for those type of products. So the rate difference between the two is quarter to a half. Depends on you, depends on the loan, depends on the loan to value, depends on the debt to income, depends on your credit score. All that, sure, that all matters. But if you are the same borrower asking for a conventional loan with a qualified mortgage and a non-conventional loan with a non-qualified mortgage, the rate difference is very, very close. So if you're out there in the marketplace and you're looking around for these types of loans, make sure you're working with a broker. Brokers can shop. They can look around. They can see what the best deal is for you. For instance, you may be qualified for one, but may want to do another, even if the rate is more expensive. Why? Because the actual loan itself gives you much more of a dynamic in terms of what you can purchase and how much you can borrow. And that's important, especially in this marketplace. Why? What is the confluence of events? I just said that the 30-year fixed rate is at about 4%, 4.125%. Let's also look at the value of real estate. Now, what I've seen in my research this week for the show is that the value of real estate has slowed significantly in its increase year over year. And that means that the product out there is more available to you. The rates went down, and the rise in real estate prices has slowed significantly to more like 3-4% this year in Southern California. That means that your dollar this year is going to buy you more than it did a year ago. And that's really important if you're a first-time home buyer, if you're a step-up home buyer. And there are many people coming into the marketplace that have not been in the marketplace before. These things really have made me very excited for you out there as borrowers, because you can get into product this year. You can buy a home. You can look forward to selling your home and buying the next home, whether it's, your step-up market, i.e. you bought a starter home and now you want to get into the next home. Or let's say that you've been in a home for the last 25 years, raised your kids, and you want to sell. It's a good time to do that. More people are going to be in the marketplace, and as a result of the slowing in the increase of the value of properties in Southern California, we've seen more properties on the market now than we did a year ago. Supply and demand tells us that means that the prices are more able to be negotiated. In terms of a buyer, you can negotiate the prices down a little bit. Now, I even looked at a property the other day up in Porter Ranch, and many people may not know where that is, but that's in the town of Northridge, California, and in that particular town, this was a foreclosure. Yes, there are foreclosures still on the marketplace. Now, foreclosure rates nationally have really taken a dive, right? They really don't exist the way they used to. It's below 1% in terms of foreclosure rate, in terms of 90-day late on your mortgages. All of these things really don't happen, but they are out there, and we found this. So we called the agent. Guess how many offers they had? Not that many. I was surprised. The guy said, yeah, give me an offer. Let me know what it is. So what this tells me is the availability of product on the market, what you can afford has gone up. The product is more on the market. And so therefore, what you want to be able to do is get into something now. Springtime is the best time because most of the product comes on the market, I would say now, March, April. That's spring, right? We're in spring. Daryl, are we spring right now?
Yeah, about a week ago.
About a week ago, absolutely right. So it's important for you to understand that these are the most important times of the year in order to buy a house. Now, I know kids are in school. I know you're not thinking about it. Maybe you're renting a property right now out in San Bernardino and Riverside. Our great fans out there on KCAA, KMET, and up in Tahoe at K-Tahoe, KTHO. I really appreciate all of these great listeners all over California listening to the show and contributing each and every week. By the way, if you have questions, write them down. You can email me, info@malibufunding.net. You can call me at the number I've given. If you want to see the show, you can go to YouTube and see the show. Our show is on YouTube. The channel is Jeff Barton, the Real Estate Voice. My NMLS number is 79620 if you want to know my authority in giving you this terrific information information that you may not have from other sources. We have a great show for you today. We have April Lopez, Nina Penny, and Anna Gonzalez, three great guests that will talk about all aspects of lending and real estate in the marketplace. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning into the show this week, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929, our telephone number. Pick up the phone, give us a call, write the phone number down, ask questions later. You can email me, info@malibufunding.net. I have a website for the company I work for and that sponsors the show, malibufunding.net. Malibu Funding, Inc. is the company, malibufunding.net. If you go there, you're going to see a lot of information. But most important information there are the loan officers, the people who work at the company. They're really qualified people that care about what you do. And one of the people who is on that particular list is Nina Penny, our first guest on the show. Nina is a certified reverse mortgage professional, one of the only of 150 people certified like that in the United States. And I wanted to talk to her about reverse mortgages today on the show. Nina, how are you?
I'm doing great. Thanks for having me.
Thank you very much for coming on. Listen, I also want to get you out to the Las Vegas Real Estate Show. I think there's a great need for you to be able to educate people on the reverse mortgage process, how it's not what they think it is in terms of dangerous. It is a great product. And if you could just describe a little bit about that for us before I get into some of the other questions I wanted to ask. Tell us about what is a reverse mortgage anyway?
So a reverse mortgage is simply an FHA loan that you are not obligated to make any payments on. If you'd like to make payments, you can, but you're not obligated to do it. But, when all is said and done, it is an FHA loan.
Okay, so that's about as simple as you can get. On an earlier segment in the show, I was talking a little about FHA, and FHA is the Federal Housing Administration, and that is an insured loan by the payments you make. How does the insurance work if you have a reverse mortgage, or how do you get away with not paying that, and what happens to the amount of money you're not paying?
Okay, so imagine when you take out your loan, you pay an upfront amount of mortgage insurance. That's 2% of the base loan amount or of the appraised value. Okay, so you're going to pay that upfront fee. And then there's a monthly fee of 0.50, and that gets added up along with the insurance from the day that you borrow the money until the day you pay it back. Okay,
excellent. Now, you were talking to me earlier about the advantages, some of the tax advantages that you might have if you are using a reverse mortgage. Explain that a little bit.
Sure. There's a couple of different ways that people look at using reverse mortgages in, retirement years. And here's a couple, since it's tax time, I think people find it really interesting.
Mm-hmm.
Number one, any funds that you get from a reverse mortgage, Jeff, it's tax-free. You don't ever have to pay taxes on the amount of money you get on a reverse mortgage.
So this is almost as if, So if you do a reverse mortgage, one of the options is you can take a lump sum out of your mortgage. Is that correct?
That's correct.
And then, go on. I'm sorry.
You can take it any way you want. You can take it in a monthly payment. You can take it in a specific amount of money for a specific amount of time, or you can leave it in a line of credit, and which is the most popular way I find most of my clients are taking it.
Okay, and it's non-taxed, meaning it's not taxed as income.
Correct. It's not income. It's just like if you refinanced your home and took some cash out. It's a cash-out refinance.
And most people are using this to live on, or is it just a way by which they can take money out of their house and invest it? Or, as you said, they're using this option of a credit line. How does that work, and how are they using that particular line?
So the line of credit is really fascinating. What happens is that a lot of people, when they're younger, take out a line of credit. Maybe they, don't feel as if they have enough cash to last them for as long as, they think they're going to live. So they open up a reverse mortgage. On the adjustable rate product, there's something called a growth rate, and that probably hovers around the 5% mark, which means that if you have access to $100,000 on your reverse mortgage and you don't touch it, you leave it in the line of credit, that has a growth rate, which means it will grow by that 5% per year and compound upon itself. So you get 5%, as long as it's sitting there and it compounds against itself. It could be that over 10 to 15 years, you might have more money in that line of credit than your home is actually worth.
Now, how does that work?
Well, it's just an account. Imagine it's like a credit card.
Mm-hmm.
You get a credit card, and instead, it sits there, and they give you increasing your credit line. So it's much like that. It's not actually cash, but your credit amount increases that you can tap into.
Even if your credit line is more than what's the equity in your home.
Yes.
And
it's amazing.
Yeah, no, that is amazing. You're right.
Financial advisors look at this as a tool to help, seniors have an additional funding stream, an additional bucket.
Interesting. Very, very interesting. Now, on some of the other tax implications of a reverse mortgage, if you have IRAs and Roth IRAs, how are you using the reverse funds to pay the taxes if you switch one from the other?
Okay, so here's a very interesting philosophy.
Okay.
One of my financial advisors has turned me on to a DVD. It's called The Power of Zero.
Okay.
If anyone has not seen this, it's pretty intense. However, the concept of it is that to make sure that when you retire and you're fully done, to have all of your money, your income, or whatever you're living off, in a zero tax bracket.
Right.
Okay?
Mm-hmm.
That's the end-all game. So a lot of people that have IRAs, you know what? They use the money from the reverse mortgage to convert their IRAs into Roth IRAs.
No.
And that's way, when you're taking your money from your Roth IRA, guess what? It's tax-free. You've used your reverse mortgage money to pay the taxes on that amount. Pretty savvy, huh?
Very savvy. And I want to tell people out there that Nina and I, although in the business and very knowledgeable, want to have you make sure that you talk to your tax professional about any tax issues, especially when it has to do with converting one IRA to another, just to make sure that what you're hearing on the show today is accurate and make sure that you are doing things that your own particular tax professional would want you to do. Just needed to say that a little bit up front. I think this is kind of exciting in terms of what reverse mortgages can offer. I want to ask you a question about working with people. When they hear these advantages that you might be able to take advantage of, is there some skepticism still in the marketplace about what reverses are and what they do?
Absolutely. Absolutely. It's really, we're still struggling to overcome the old misconceptions of, the bank goes on title with you or
right.
The bank takes the home, because those are not true. This is just a standard, regular FHA or a standard mortgage. Instead of making your payment, when you sell your home, that's when the bank gets paid.
Now, many people who are older are wary because they figure, okay, so I'm going to take this reverse mortgage out, but what if I die? What happens to my spouse? What happens to the home? Could you explain that a little?
Well, if the reverse mortgage doesn't come due until the last person on title leaves the home.
Okay.
Okay, at that time the loan is due. So let's say, my children love my home and they want it. They can either refinance it only for the amount that is owed. That would be the amount of money that I took from the reverse mortgage to spend, plus the interest and the mortgage insurance that's compounded over the course of time. They can pay that off and own the home.
Okay.
Or they can sell it, and any proceeds after paying off the bank is theirs.
I see. Okay. Well, that, understanding the, the nervousness of people who will get into these products, because there's so much misinformation in the marketplace. Mm-hmm. And I think based on your certification and how you educate people, give us an idea of where people can get more information from you about reverse mortgages.
Well, they can definitely go onto my website, which is simplereversemortgage.net. Or you can give me a buzz at 480-635-2410.
Okay.
Or you can email me at nhpenny@msn.com.
Nina, thank you very much for coming on, explaining this. We're going to have you on the TV show. We're going to do a big symposium that anybody who's listening to the show, we will keep you tuned to what's happening in the reverse field, especially with Nina, the expert in the field. Nina, thanks very much for coming on the show.
Thanks, Jeff. Bye-bye.
Bye-bye. Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, you can get through and talk to us right now about what's happening in the mortgage industry. And specifically, can you get that loan? I'm trying to sell a house. My kids want to buy a house. My grandparents, my kids, my uncle, everybody I know, my friends, they all need information about mortgages. What's the best product? Can I get a non-QM? What is a non-QM? Lots of questions in the marketplace. Look, the rates have come down. The products are more available now than they have been, and the real estate prices have slowed. So there's more product on the market. Great time to get into it. If you want a great information about product, I've got somebody for you right here on the show. April Lopez from Nations Direct Mortgage is kind enough to come back on the show and talk to us about what's happening in her company with products and interest rates. April, how are you?
I'm doing great, Jeff. How are you today?
I'm fine. Thank you very much. And thanks for coming on the show. I do appreciate it.
My pleasure.
Okay, so with the explosion of non-QM product out there all over the marketplace, give us an idea of what's happening at Nations in that realm and how you might be able to help some different borrowers than would actually go to a conventional loan.
Right now at Nations, you know, all the competition is not doing business developing. And
I'm losing your voice, April.
I'm sorry?
Yeah, I'm getting a lot of interference. Maybe we can give you a call right back. How's that?
Sounds good.
Okay, thank you.
Okay, sure.
And so as we attempt to call back April Lopez at Nations Direct, what she was talking about is some of the opportunities that her company has in the non-QM space, and that non-QM space, of course, is the non-qualified mortgage, and these would be for borrowers who are less than stellar credit, less than W-2 income. There are business bank statement loans, there are personal bank statement loans, there are ITIN loans out there in the marketplace. There are even some stated loans, some high equity loans, meaning that you have 20, 25% into the loan. There are all kinds of different options out there in the marketplace. So what we're going to do is try to get April back on the line to be able to tell us a little bit about what's going on over there at Nations and to help us understand that, you know what, you don't have to be a perfect A-paper borrower. So is she there, April?
I'm here. Sorry, I was having a little bit of interference there.
No problem at all. So we were talking about non-QM loans in the Nations Direct sphere of loans, and asking your opinion as to what might be a great choice for a borrower out there.
So right now, non-QM is designed for the self-employed borrowers who make a lot of money and they deposit it into their bank, and they need an alternative source of income verification, which would be bank statements.
Right.
And so we're seeing an influx of bank statement loans where we can actually give, you know, more loans to buyers who might not be able to qualify traditionally.
Now, the business bank statement loans, what exactly are you looking for in terms of the paper? Do you need something directly from the bank? Do you need something emailed or faxed to you? How do you get this information from the borrower?
So what the borrower does is he provides us, he or she provides us 12 months of personal course.
Yeah, we've got some issues. I don't know if you're on a landline or you've got a Bluetooth working, but for some reason I'm having some difficulty with hearing what you're saying.
Sorry, Jeff. Can you hear me?
Yeah, it's perfect now.
Is it? Okay.
Yeah.
I just switched ears, so my apologies.
No problem at all. So the business bank statement loans, what kind of bank statements are you looking for? In what form do you want them?
So we're looking for 12 months of personal or business bank statements, all pages. And what we're looking for, we're going to look at the gross deposits, and then what we're going to ask the borrower to provide is either a CPA letter stating what their expense factor is that is being used through these bank statements, or a simple profit and loss.
Okay.
And then we're going to look at the net ordinary income on that profit and loss for qualifying purposes.
Okay, so you're looking for obviously somebody who is making money, but not necessarily a W-2 person, right? I mean, this is the ideal borrower for this type of loan.
Absolutely.
And in the documentation, i.e., the CPA letter or some kind of profit and loss, are you looking for some certification from the I guess the accountant on the profit and loss statement? How does that work?
No, it actually can be a borrower-generated profit or loss. So we're looking for a basic gross receipts, less expenses, gives us the...
Okay, we're losing April. I don't know what the problem is with the actual connection here today, but it's okay. So what April was saying was that the actual profit and loss statement from the borrower can be generated, I guess, through QuickBooks or some other means, and then that particular calculation that they do in terms of the underwriting process is made based on the profit and loss statement, the business bank statements, and or the CPA letter. And all of these are issues that can be worked at with your local loan officer, whether it be at Malibu Funding or whether it be at any company you're out there working for. Yeah, no, we're good. Thanks, Daryl. So if you're out there and you're looking for the type of product that we're talking about right here, and April, unfortunately, we just had some issues with the phone reception, as happens. Now, one of the things that we can do in terms of trying to get you in contact with either us or other loan officers or other lenders is provide you with the information, and April was good enough. April has a particular telephone number. If you'd like to call her at Nations Direct, her telephone number is 818-398-1272, and she can help guide you or set you up with either a person who can help you with your loan application or to be able to tell you whether you qualify for a particular loan. She is terrific, been around the business a long time, and has worked with Malibu Funding for years at Nations Direct, and we really appreciate her particular viewpoints and her knowledge in the products and in the service section of what we do here in the loan business. The loan business itself is not simple, it's not easy, but trying to provide for people to be able to get loans that they might not often get or otherwise get if they were using a conventional loan or an FHA loan. As I said earlier in the show, FHA has come down and said they're going to make it a little bit more difficult for you to get this loan. Why are they going to make it more difficult? Because the default rate on some of these loans is higher than they need it to be, because the insurance that the people are paying in order for FHA to remain afloat is in the danger zone, or at least in a zone by which they're not comfortable. So they're going to make the FHA loans harder to get, and I don't know whether that means they're going to just increase or make it more stringent in terms of the underwriting guidelines, or if they're going to, as they have in the past, up the mortgage insurance. I know Nina Penny had talked about the mortgage insurance premium, the upfront 2% cost plus 0.5%, and I believe that 0.5% insurance is divided on a yearly basis, not a monthly basis. And as a result of that, FHA is trying to, keep their head above water and offer programs out there to you that are programs that can still be effective and still be viable, even though they're having some difficulties. Now, I don't think FHA has gone out of business. I don't think anybody thinks that they're in trouble per se. But back in 2007, 8, and 9, FHA was the primary source for a lot of different loans out there. Certainly 10, 11, and 12, FHA was 80% of the loans out there. And as a result of that, they've had a lot of experience, obviously, with, oh, and by the way, Daryl, did you hear Ben Carson's leaving HUD? Yeah,
I did hear that.
Now, I don't know if anybody out there realized Ben Carson was still in the government, but yes, he's been the Secretary of HUD for... 3 years.
Yeah, since the beginning of the administration, basically.
Right. He's been a very silent, but you know, a guy that's been there. I mean, I don't know how much Mr. Carson or Dr. Carson knows about FHA, but he's been, pretty steady in terms of his leadership. I don't think that there's been a lot of divergence or controversy in what HUD's been doing. And HUD, as everyone knows, is pretty much the backbone of the housing industry, especially in many of these FHA loans.
When it comes to actual leadership or CEOship or chairmanship, I mean, subject matter knowledge isn't the number one requirement.
Right, and I think after what happened in 2007, 2008, we had a HUD secretary who pretty much had to allow FHA to do, as I said, 80% of the loans out there in the marketplace, which was not easy to. Oh, I see we're up against the clock. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll talk about this on the other side. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone, give us a call. We're talking about mortgages. We're talking about real estate. We're talking about specifically programs that you can use in order to get that loan that you need to buy that house. The mortgage rates are down. Inventory is up. Rise in real estate prices has slowed dramatically. And I think right now, spring 2019 is an excellent time if you are a first-time home buyer or if you just finally are ready to purchase. Millennials have woken up and they are ready to buy. So now is the time to do that. I think we're going to have a nice summer and a great spring to the start of our buying season in 2019. I wanted to bring to the show Anna Gonzalez, and she's here with me now. Anna, first, how are you?
I'm doing great, and thank you for inviting me, Jeff.
Thank you, too. The reason I wanted to bring Anna to the show is because she works at Bank One Mortgage, and she works at RE/MAX Grand. And both of these positions that she works and where she works gives her an insight as to some of the issues that you need to consider when you are applying for a loan. And she is an expert as a processor. So the first question out of the box is simple. I mean, if someone wanted to do a loan, and I know this is like Basics 101, but just bear with me with the answers to the questions. What are the 5 or 6 pieces of documentation that you need in order to even start the process?
Well, the main thing, Jeff, would be to go ahead and actually take a look at their credit. So that would be our first and main piece of information.
Okay.
We also need the last 2 years' tax returns with all the schedules, and if they're W-2, they're W-2. If they're 1099, they're the 1099. And if they're wage earners, the last 2 pay stubs. And and then also bank statements. We want to see that they have the money ready to go, because when you're submitting an offer, you want to be ready to go. You want to have precise information on the table to know that the person is ready to proceed. With the purchasing of the property.
Well, that sounds pretty simple, right? I mean, this doesn't sound like a complex process.
No, it is not. And it's basically by doing that, you're just you will be understanding where you're standing. You will be getting ready if you're not ready. So some people are ready right away. Some people may have to work at a couple of things. Some people may have to clear some accounts off credit or reduce their debt. So it depends. Each case is different.
Okay.
But by sitting down with someone and getting pre-qualified, you're able to understand where you're at and where you want to go.
Now, a lot of borrowers use different names depending on their job or whatever they're doing. Some cultures have the use of their middle name with their last name, their first name with their last name, or any number of combinations therein. Making sure that the person is on the same name on the credit as is on the application is extremely important. How do you verify that all that information is correct? And I'm sure you're telling the borrowers that is extremely important when filling out the 1003.
Correct. That's a great question. Actually, the way you verify the client's legal name is by by verifying the name under California ID or driver's license.
Right.
That's their legal name. That's what should be going on the credit report when you run it, and that should be going on your application, on your 1003, and that should be going everywhere because that's how their name, how their legal name is. So everything else is AKAs, but that's their legal name.
Okay. Now, in California, like in every state, there is a new license being issued, and the license being issued is in the form of both a federal ID number as well as a California name and address. Is that being used extensively now, or have we crossed over into that world of using the new license yet, or is that not until next year?
I haven't seen it. I know it's starting this year. I haven't seen the crossover yet.
Okay.
But I'm pretty much aware of that.
Right.
And so that would be an extra step that people will have to do at the DMV in order to have the federal ID. They have to show, I believe, two different types of I guess
forms of ID, like a Social Security card and I believe a passport, something like that. Go ahead, Daryl. What are you going to say?
And also two pieces of paper that identify your place of residence, like
like a bill,
utility bill, and,
something like that. Yes.
Yeah.
Okay.
Yeah, my wife just went through it.
Oh, I see.
Yeah.
Awesome.
Yeah, they didn't like our marriage license. Says it would look like a great souvenir, but it wasn't the actual license itself, so we had to go get another one.
Yeah, I only bring this up because I know it's going to become a point of contention after this year. So as soon as people get aware of it and get the new license, the better, especially if they're applying for a loan.
That would be great. Yeah, but I haven't seen that starting to yet. But I know, like you said, it will be coming up. Yes.
Okay, so some of the solutions that you offer in terms of your processing style, what are your strengths working with people who need a loan?
I will say that I focus on overcoming any barriers they might be facing at the moment they're applying for the loan. So perhaps we have clients that have no FICO.
I see.
And then we tell them this is what you have to do. Go ahead and be added to a couple of accounts. And within less than 30 days, you'll have a FICO. And that can be the difference between buying a house or not buying a house.
Right.
And then also having the FICO score that they need in order to purchase, if they need down payment assistance, if they need, closing cost assistance. So there's different programs out there that will provide them with down payment assistance, closing cost assistance, and so everything's based on FICO. So our FICO score is one of our main pieces of the pie in order to purchase a house.
So, credit score, this is what we're talking about, solving issues with what's in the credit report, or if you have no credit report, how to get credit, right?
Correct. Yes, absolutely. And then so by simply using the tools that we have, we can actually run the software and let them know, hey, I want to increase my FICO by 20 points or 30 points, and what would be the plan of action in order to get that FICO score to where we need it to be. So those are the main things that you look at when you sit down with a client, because having a higher FICO makes the whole process a lot easier for the client, and you want to make sure you take care of them on that in that area.
Is it true higher the FICO score or the higher the credit score, lower the interest rate on your loan?
Not necessarily, because that will be something that cannot be done that way. But the way it works, it's actually people can get a loan with a 620 FICO, but the barriers come in when the add-ons come on. So the lower the FICO, the more add-ons the clients will have to pay, but the higher the FICO, the less add-ons. So it would be unethical for lending companies to lend money based on FICO, but what they do is, you qualify with the 620. As long as you have a 620, we can grant you a loan, and in FHA financing, you can go as low as 580.
Right.
But the higher, the better it is, because then what it is it's just it's all based on your not only the FICO, but also your debt-to-income ratio. So everything is can be manageable, but there will be add-ons that will have to be paid.
Okay. You've offered some pretty good solutions in terms of trying to get people qualified through improving their FICO score. What are some of the other issues you might come across in terms of the income? I know that income and the ability to repay is at the heart of most of these loans. What are some of the issues you deal with, and how do you help?
Well, the way we work with clients is each person will have a different scenario. We have individuals that can only show 1-year tax returns. So we want to make sure that we have access to those programs. We have the non-QM products, which can offer opportunity to people with just bank statements and not having, or just W-2 programs. So depending on the scenario, we have the different products available. We want to have the diversity, because we want to be able to help, the different kind of clients. Not everybody's going to be the wage earner, the making a great hourly wage. So you want to be able to have the opportunity to help those clients that nobody else out there will be willing to help.
Okay, great. Hey, could you shout out your phone number? Let people know how they can get in touch with someone who can help them with their loan or real estate needs?
Yes, my number is 818-822-6876.
Okay, excellent. Anna, thank you very much for being on the show. I really appreciate it and appreciate all the information.
Thank you very much, Jeff, for the opportunity, and I'm excited to be here assisting, not only, anybody else who has any questions, but like I said, I'll be here and, to overcome any barriers they may have in the purchasing process.
Thank you, Anna. And that's Anna Gonzalez from Bank One Mortgage. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. A little bit of sleep at the wheel there. Sorry about that. Welcome to the show. If you're just tuning in right now, this is the Mortgage Voice, and I'm Jeff Barton. And the phone number I gave you is the number to call. If you'd like to get in on the show, ask me some questions, find out more about what we're talking about on the show. Today's show, we've got three great guests that have appeared on the show, and I really appreciate them doing so. One thing I wanted to get to right up the federal agency that controls a lot of the FHA loans, the Federal Housing Administration, told lenders this month it would be flagging more loans as high risk. I guess FHA has been receiving some loans that have not been repaying according to the schedule that they're supposed to every month, meaning that a lot of lenders who have made loans to borrowers with FHA insurance on them, I guess the borrowers are having a difficult time repaying, at least some of them. So their FHA is going to start to slow down the process, i.e. more scrutiny and more securitization on those particular loans. FHA loans will be harder to get today than they were yesterday. Now, why is this significant? FHA does 3.5% down loans, and they charge insurance enabled to do that. So the pool of insurance is covering losses once a borrower does not pay, and that's how it's been working forever. When FHA gets into trouble, i.e. that there's more money going out than coming in, they tighten standards, i.e. they require either more money as insurance or they slow down the rate by which loans are being made. So if you're out there and you're thinking about getting an FHA mortgage, which you're going to only have to bring in 3.5%, the guidelines and the strictness by which they scrutinize and look at your loan is going to be tougher on you, tougher on your lender. So bear that in mind when you're giving documentation on FHA loans. They're going to want to make sure that you can repay the loan. That's the ability to repay the loan. And those APR, the ability to repay is really important for lenders, because obviously if you can't repay, then they're on the hook for it. And certainly FHA doesn't want to be on the hook for it. Even though you have insurance and you pay for that insurance, insurance is insurance. It really doesn't pay for the loan. It just pays for the policy. The company that does the insurance then investigates to make sure that there's no fraud in the file. It's kind of a mess, the whole thing. Although you may feel secure in the fact that you're paying insurance on your loan, if in fact you default on that loan, or if there's a bunch of you that default on that loan, the whole system comes to a screeching halt, which happened in 2007, as everyone remembers, from the mortgage fraud days and the mortgage implosion days back in 2007, 8, and 9, when the entire industry came crashing down. And oddly enough, in those days, 80% of the loans done were being done FHA. Even though the loans themselves were stricter, It was the only loans, because of the insurance that was being paid on them, that were being guaranteed, well, at least insured, which is kind of a guarantee to most people, right? I mean, you have car insurance, so you're driving down the street, you get in an accident, you feel like, okay, I'm covered because, I have that loan insurance. The car insurance on my loan, on my car. And because of that fact, you feel like your car insurance guarantees that the loan will get paid off. Well, not necessarily. If it's investigated and there's some issues with the particular accident or your involvement, or maybe someone was drunk at the wheel, they're not going to pay. And that's very similar to what FHA does when they're looking at your loan if you default on the loan. They want to make sure that the documentation is correct, that everything has been done on the up and up, and that there's no problem with the loan itself. So FHA, borrowers out there, be a little bit aware, okay? Because that's what's happening in the marketplace. List came out this week of the 10 best cities to move to if you're a first-time home buyer, and the 10 worst cities to move to if you're a first-time home buyer. Okay, Daryl, this is kind of a little contest here.
Yeah, this seemed to have my name on it. Yeah.
Okay, so the 10 worst cities. So give us the best cities that first-time home buyers should be thinking to move to. Any city.
Denver.
Let's see. Denver is not on the list. However, let's see. I'll narrow it down for you. One of the cities is in Virginia, another in Kansas, and another in Minnesota. Those are the top 3.
Wow. Kansas must be Topeka.
No, it's Kansas City. Come on.
City.
That was a gimme.
There's Kansas City, Missouri, and there's
Kansas
that's
City. True.
Yeah, Kansas. Sorry.
See, most people don't know that.
Yeah.
There are 2 Kansas cities.
Yep.
And one's in Missouri and one's in Kansas. The one's in Kansas City, Kansas is 9th on the list of the best cities in America to move to if you're a first-time home buyer. The number 1 city, of course, is in Pennsylvania.
Number 1.
Number 1 city.
First-time buyer.
First-time home buyer.
Pennsylvania.
In Pennsylvania.
Pittsburgh.
Pittsburgh is it. Bing, bing, bing. Very good job.
I've been through Pittsburgh.
Yeah, 3 Rivers, right? I mean, it's a nice city, I guess. One of the things about this particular list, and I'll just go through it quickly, it's Pittsburgh, Raleigh, North Carolina. Ever been down to North Carolina?
Not a lot.
Okay, I've been there.
Not so much. Georgia.
Georgia, yes. But in North Carolina, beautiful climate, really nice place. My niece lives down there with her family. I enjoy the state. Oklahoma City, which I've never been to, another place I've never been to. Hartford, Connecticut. St. Louis, Missouri, which surprisingly enough, the city that died has now made a comeback to be one of the most, I was there about 6 months ago. We went through some of the old towns, some of the old brick, and it's a very old city, a lot of history to it. It was pretty interesting.
Yeah, I've done some business there with Boeing. And
that's right.
Yeah, this was 10, 15 years ago, and it still seemed economically depressed at the time.
I think it was, and I went out there, about 6 months ago, and we stayed in an older part of town, and it was where some of the old breweries used to be. Of course, most of them are shut down by now. Budweiser's still there, but of course, Budweiser is not owned by Budweiser anymore. It's owned by InBev, I think. And but it was interesting because a lot of the gentrification that has gone on has gone unnoticed to the rest of the nation, but St. Louis has made a bit of a comeback, and here on this list, number 5 as to one of the best cities in America to go to if you are a first-time home buyer. Cincinnati's on that list. Buffalo, New York is on that list.
Buffalo, it gets cold.
It's funny. I like Buffalo only because I spent some time there, played hockey up in that particular area. It's snowy, it's cold, it's off the Great Lakes, and I'm telling you, it's in what they call the snow belt. Mm-hmm. 5-6 feet of snow is not unusual for a snowstorm in Buffalo, New York. These are hardy people who enjoy shoveling snow. No, it's not for me, that's for sure. Okay, let's go through the 10 worst cities in America. 5 of them are in California.
San Francisco.
Let's see. Number 1 on the list, San Francisco. Worst place in America if you're a first-time home buyer.
I would imagine because of the cost.
The price of homes. You can't afford a home up there unless you got $1 million. And then you got a fixer. Some of the other areas, number 2 on the list would be?
Los Angeles.
You got it, number 2 on the list. So San Francisco and L.A. And number 3 on the list, also in California.
San Diego.
Nope, Sacramento, California. And San Jose is number 4. So the top.
That's still the Silicon Valley
exactly
thing.
Right.
Yeah.
I mean, it's basically the same area as San Francisco. But these 4 cities in California tell you that California. I mean, the San Bernardino, Riverside, and up in the Tahoe area, you are listening to the show and you are saying to yourself, okay, what about my area? Yes, you guys are on the list too, but way down. But California real estate, and as I said earlier in the show, it is at its best value it's going to be in a while. Why? Because rates are down and inventory is up, and prices have slowed in terms of their particular rise. So if you're looking for a house and you're looking for a way to get in on the California miracle, which is basically real estate prices and real estate wealth, to be able to get in on that, now is the best time to get in on it. The other 5 names on the list, number 6 is San Bernardino, Riverside, California. Number 7 is San Diego. So California is the place where real estate prices go up and down. I think you can afford something now if you've got a good job. Even if you don't, the non-QM market is still around. Anyway, I'm Jeff Barton. I'm your voice in the real estate industry. Really appreciate you guys tuning in for the show this week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.